So DeFi, as many people know, like DeFi kind of kickstarted the last bull run more or less, and it's evolved a lot in the past few years, and it's had a lot of setbacks too, including the whole FTX thing. So a lot of us believe it's the future. That's why we're building. We have 3 great builders here with us. And where are we today with DeFi? What are the challenges we're facing? How are we going to get DeFi to mass adoption? What is the future? So we want to talk about all these things with these great speakers that we have today here. But before we do that, just like a very quick, 1 minute or something like short intro, like introduce yourselves, like the protocol you're building, you're developing, and we're going to get into some hopefully not too spicy, but spicy enough topics afterwards.
Hey everyone, I'm Hao. I'm working at Hedge Labs. We are like a DeFi protocol on Solana. I'm doing a CDP stablecoin, basically minting stablecoin against collateral. Excited to be here.
Oh, thank you, Victor, and hi, Hao. Hello, everyone. I'm Charlotte, and I'm heading the BD and the founding member of Zomma protocol. So what Zomma does is that we are the DeFi option protocol that offers the highest capital efficiency. So before we dive in, can I just have a show of hands to see how many people trade options, crypto options? Oh, that's a lot. Bidding on centralized or DeFi. Oh, not a lot. Okay, I'm sorry. Okay, after this, you guys should really take a look at DeFi options or crypto options. Thank you.
I'm Nick, head of strategy at Perpetual Protocol. In a nutshell, we do Perpetual futures. We're launched on Optimism. We've been live for about 2 years. We've seen probably a 14, 15 billion in terms of kind of cumulative trading volume. And that's super high level.
Awesome. Thanks everyone for that. So let's talk about let's start with talking about this great narrative that we're getting, right? Where we have FTX kind of implode. People losing trust in centralized exchanges and institutions that don't provide transparency. It's obviously creating this whole trend of people showing proof of reserves and so on. But more so, DeFi is getting a bit of a tailwind, right? How do you feel about that, and how do you think we can get based on your experience, based on how you anticipate the future, how do you think we can get to mass adoption? I know there's a lot of hurdles, but you guys are working in different kind of areas, and you're probably foreseeing different issues that we're going to have. And I'd love to hear from each of you, how do you feel, what do you feel like the hardest thing is going to be to get, say, 100 million people, or at least 10 million people to start with?
I mean, I think I'm pretty sure I'm not the first one to say this, but self-custody is definitely one of the big issues we need to solve. I think even right now it has gotten a lot better already since DeFi started or crypto started. But really, you get these numbers that you mentioned, like 10 million, 100 million next users. And I think the collapse of FTX showed that even more, that self-custody is important. But I think right now the experience is just still too hard. It's still too complicated for new users to onboard into crypto, take care of their own wallet and their own keys. It is a new paradigm. It's not as easy as you sign up for an account, you have a password that you need to remember. There's a lot of more things that you need to take care of, and I think that's still the biggest problem we have to solve in order to grow DeFi further. Yeah.
For us, I would like to quote this from QCP yesterday, also the speaker. I think trust is the most important commodity right now. So in order to gain the trust back is really important. And also I think learning to hash the risk is the most important thing right now. So we thought about options because it has been using it as the hedging tool in the traditional finance space. So we thought the idea of hedging your assets and owning your assets in the crypto space is really important. So right now, I really think options can be an alternative to how we can, manage risk and also lower the risk in our whole portfolio. So that's what we are building right now: trust and also evangelizing the idea of hedging risks.
I would say I agree with the UX and self-custody as a big problem. I would throw in an interesting, I don't know if I 100% believe in it, but there's an interesting counterpoint from Mika on Twitter a while ago, which is kind of, there isn't much of a use case other than like a very, very speculative and kind of trading one right now in a lot of DeFi, right? Like a lot of the growth came from kind of inflationary tokens. And so like the underlying yield may not necessarily be kind of quote unquote real. And so I think we just need to find that kind of killer use case to kind of then grow this kind of next wave adoption. Given that obviously UX we still kind of need to improve, like we probably need some form of like Fireblocks equivalent for like that's accessible to retail as an example, before we can then kind of have this Web 2 experience. But I think the counterpoint which was really interesting is that maybe we are in kind of the era of email 10 years ago where maybe the new users, self-custody is going to be the norm and we don't need to worry about them. But the question around that then is kind of how long will that take? Is that 5 years? Is that 10 years? But who knows?
I agree with all these things. I want to kind of zoom in a little bit into what you said, Charlotte, around risk, right? I think it's pretty obvious that in a world where you have all these assets that are being traded, and you want to bring institutions in, these institutions make money and they need to hedge their risk. It's not just the users, right? And clearly, like options, derivatives, structured products, those are all instruments that people use to hedge their risk.
That's right.
But we still have an issue today in DeFi using these things at scale. Like we have a TVL issue, we have an incentive issue, right? How do you think we can solve that? How do you think we can cross that hurdle where like real institutions can actually hedge their bets on chain? Because that's what we really want. We want transparency, right?
Well, I think that is not the problem that Zomma is experiencing right now. I think that's like a general problem for most of the DeFi protocols. So what we're trying to do, we're trying to catch up to the capital efficiency that the centralized exchange can offer. So we see significant volumes with Deribit, Bybit, and Bit with their options trading. And just, even when everything is going down, Deribit, Bybit, and Bit's options trading volume is all-time high in November. For in that case, in that sense, we feel like institutional funds and investors or even traders are already moving into the centralized exchange options trading, perpetual trading, and in that aspect. So moving towards DeFi, I think that's what we are trying to solve. We're trying to offer a higher capital efficiency to attract the traders, right? So what we're trying to do is that we want to offer a cross-margin trading for the traders, and for the liquidity pools, we're trying to be innovative in a sense that not just the institutions can come in, the retail can also come in. So all of this liquidity can accumulate up to the sun that is significant enough to kind of, trade against each other. So in fact, if we try to work hard together to bring innovative ideas, products, I think liquidity can be really significant in a way. And there's a long way for all of us to work together.
So in a nutshell, we're trying to trying to come up with creative ways to improve capital efficiency so that we can solve the liquidity problem.
It is.
Nick, would you like to comment on that too?
I agree, but I actually think that if you look at a lot of the DOV vaults that kind of exist, it's actually a lot of whale volume that comes through. And I'm seeing some interesting kind of projects in the derivative space that is trying to bring kind of OTC options on chain, which to me I think is probably the more interesting one with kind of the volume drivers, just given that, like, yes, retail with enough kind of retail will get like significant volumes, but honestly, like 100, 200, 300 whales is going to drive significantly more volumes than we have right now, but they just don't have the infrastructure to kind of settle, right? Like they have to go through Paradigm, then that settles through Deribit. All the market makers use Deribit because then like everything's cross-margin, there's futures there, there's regular futures, the perp futures, and everything's kind of cross-margin, so it's capital efficient. Until we kind of get to that level, it's going to be super hard. And I think that might come with OTC first, but I'm not sure.
Got it.
How about yourself? How do you think about this topic? I know you have insight too.
I think it's challenging. Just you're asking my opinion. I'll keep it brief. I think it's challenging for a bunch of reasons. I personally think that oracles have been posing a lot of problems to DeFi. I also think that having like solid on-chain liquidation has been really, really tough. And then on the other side, you get headwinds coming from the lack of demand. So I think in general, it's kind of like it's almost like a chicken egg problem that I admire you guys for trying to solve it, right? So I'm trying to learn a little bit more from you guys how you're kind of like tackling it.
Right. Thank you.
So let's switch gears a little bit because we were talking about FTX. I mean, it's really hard not to talk about FTX, but FTX also triggered a lot of scrutiny, right? So regulators are looking more into DeFi right now, and like on one hand you have a bunch of people are saying crypto is super evil. On the other hand, you have like people are saying DeFi is good and it's going to solve this problem. How do you guys feel about regulation in general? Like, do you think it's good? Do you think it's bad? Is it getting a little spicy, right?
Real spicy.
I mean, okay, so we are based in the US. I think it's a double-edged sword, right? Like on one side, of course, I think a lot of institutions, potentially even retailers are like, oh, I'm not sure. Like I hear a lot of bad things about crypto, but they would maybe trust it more if the government comes in and says, hey, it's all regulated. There's some whatever FDIC equivalent, like insurance equivalents. But of course, like you look at things on the other side. You look at things like Tornado Cash, what happened there with governance intervenience, and like I think majority of people here can agree that that's not something that we want, right? So I know it sounds like super simple just for me to say it needs to be the right kind of regulation, but I understand it's like super hard to find that right balance, right? And it's definitely not going to be easy. I think the biggest challenge that I personally see is that even for us here, like crypto is such a complicated field still. Like there's not that many experts around, and now you expect the government to like come up with sensible regulation where even us here could probably not agree on sensible policies. So I think it's just gonna, like, no matter what we say now, it's just gonna take a long time until things can shape out. But I think ultimately it has to come eventually, but it has to come the right way, right? And in order to get there, this will just take time.
But do you think if we had more regulatory clarity, we would have had less of a shit show than we have now, or it still would have happened?
I don't think we would have less of a shit show, right? But I think at the same time, it's like if I look like 20 years ahead, I think eventually we'll need that, right? I mean, I think if you look at traditional finance, what happened in traditional finance before like regulation came in, we are kind of like just speed running through that right now, right, with crypto. So I think ultimately it's going to be sensible to have like some sort of regulation. So it's a scary word, but like I think eventually that needs to come, right?
For us, I think Zomma would definitely not be the one who lead the be regulator, not be regulator. We'll follow like the big names, the big projects for sure. But what we think is that we believe in code a lot more than regulations. We think integrity is really important, and we think the thing about codes is that we trust the codes a lot more than other stuff. As long as we don't leave backdoors, there's a leakage of funds and everything, it's still really safe with the codes, right? I think codes is neutral and codes has integrity, and it all comes back to how we value our projects, how we value our users, and how we value the platform. I think that's more important than being regulated by any authority.
So open source code means that you can see all the backdoors. Blockchain transparency means that you can know who's, if Caroline is sending money to SBF and back.
Yeah, like they were leaving all the backdoors, right? But that doesn't apply to all the projects. And we are DeFi protocol, decentralized finance protocols. So we really want to leave and have the belief in it, right?
So to kind of drill a little bit into this, so do you think that in a world where code is fully transparent, do you think that a layer of regulation still helps, or do you think it's not needed?
For that, I think it's really difficult to answer. How about I ask Nick for help? Because I've been online for 2 years. I think he will have better answer than I do.
Unfortunately, I think we still need regs. Like the thing that brings me to my mind is like the quote unquote profitable trade on Solana that happened like not too long ago, right? Like, was that a hack? Was that not a hack? Like we don't like it's such a gray area. And I think that the only thing I would say is like regs would have probably helped in a case where projects suddenly weren't, like I think it actually created a perverse incentive in that you had projects running regulatory arbitrage, right? Like let's not go to the US, let's go situate ourselves in Dubai, let's like screw the laws, let's go full on and like let's just do what we want to do. And then you on the other hand, you then have projects who are trying to comply and want to comply, but they still get screwed over from a growth perspective because they can't grow as quickly. So I do think there needs to be some form of regs, whether that's kind of probably CeFi regs have to come first, right? Like before we get some form of DeFi specific one. I've got no idea what like DeFi specific one's going to look like, but I do think we still need something in place. But how that works in kind of like a global context, no idea.
I was gonna follow up with that.
Yeah,
right?
yeah. I just had to caveat.
Normally we have finance in the U.S. and we have finance in the EU and so on, right? But the blockchain is available everywhere, and even if you look at things like sanctioning OFAC territories, that's like not feasible in the blockchain unless the blockchain has censorship. And it's been super contentious, and the whole ethos is blockchains and we don't have censorship. So like, would any of you like care to comment on like how you think this whole, like, if we had regulation, suppose let's assume that going to the school of thought, what do you think are the biggest challenges for governments to work together? Do you think this is going to be like a per jurisdiction thing, or do you think it's going to be a global, like governments need to cooperate globally to kind of work with each other to bring this industry forward?
Good luck with governments cooperating, is what I was going to say.
I figured. Anyway.
I mean,
Well,
okay, yeah, I totally agree with Nick here, right? I think it totally makes sense to have a global regulation. I feel like if we need to have regulation, I feel like it would only make sense to have global regulation. Because when we get like regulatory arbitrage again, people going to whatever jurisdiction is beneficial. But I think like practically speaking, it's just not going to happen anytime soon, right? I think, not even talking about crypto, like even just like for other more fundamental issues in the world, getting governments to work together and collaborate and come up with like policies together it's just like super hard, right? So I don't think we can kind of like rely on that will come. Whether the better alternative then is to say, okay, we just do regional jurisdiction. I gotta agree with Nick. This is a super hard question to answer. I think it's. I would probably say it's probably better than nothing, because at least certain areas. I mean, even if you look at FTX, I think certain regions were actually less affected because of the stricter regulations in those regions, right? So if you look at FTX US, for instance, I think that in general got less hit than FTX International. So there are always situations where regulation can be beneficial, of course. So maybe like a regional jurisdiction could actually be beneficial, but I think it's very hard to say. It really depends on the scope of the regulation and how exactly they're going to regulate it.
Makes sense.
Yeah, I really want to share some of our personal experiences of our team. Our team is really experienced in the sense that our founders, our OGs, have been in the space for like 7 to 10 years. They've been dealing a lot with the Taiwanese government, honestly speaking, and it's really difficult because before they actually input like regulations or like, not to say jurisdiction, regulations, we have to educate them about blockchain. We have to educate them about, crypto. We have to educate them about, not even to say DeFi, wallets and everything. The process is just too long, to keep up, even for the regulators. So for regulation, it's definitely not possible in Taiwan, I feel. And so it is, not to say jurisdiction. Look at Binance. Binance got cut out by Singapore MNS, but now they're doing pretty well in Dubai. How do governments work together to actually, come to the conclusion with like the same ideas, regulations, and everything? So I think that is something that we all have to self-monitor and to self-government for a period of time to it develop to a certain extent that is matured and developed.
Yeah, I mean, it's hard for the devs to learn about everything, right? Like when they start off,
exactly.
and they're spending 24 hours a day, they don't sleep, right? Let's switch gears from regulation. Nobody likes talking about regulation, right? So let's get into another interesting thing. So there's a lot of DeFi builders right now, and like as throughout the DeFi boom, there was like TVL happening everywhere. Everyone's coming up with a new consensus algorithm every single week. There was a new chain launching every single day, like incentives, tokens. How would you choose a place to build today? And how I want to ask you this semi-spicy topic. Like you guys are building on Solana, which has an amazing dev community. But obviously, Solana has been affected negatively by the recent events, and I would like to hear a perspective on like as a dev, where we have TVL that's segmented across multiple chains. How do you how do you choose where to build? And more so in this particular situation, how do you feel about the whole Solana ecosystem, and how do you feel about projects facing this liquidity crisis that's happening right now?
Yeah, I mean, I think to your first point, how do you pick where to build? I honestly don't have like a great answer to that. I think at the end of the day, it's just like, where are you at what time and space? And like we started building in September last year. Through a Solana hackathon. So like you said, like Solana specifically, I think they did a very good job at like building this developer community with certain in-person events, hackathons, hacker houses, and that's kind of how we got into Solana. Whether we should have done more, put more thought into that, probably, but I think at the end of the day, it's kind of like, I think a lot of these factors play in, and it's kind of like I said, what place and time are you at? What is kind of like currently quote unquote hyped? Where do you see users? I think for us specifically, what was interesting on Solana back then was high performance L1 chain. Composability was a big topic for Solana, something that they pushed really hard. And since our protocol is building a stable coin, we thought like it totally makes sense if you're building a stable coin to go on a chain that is like highly composable. I think the macro conditions overall, like if you look at DeFi, I don't think it matters too much on which chain you're specifically on right now. I think everywhere is kind of down right now during the bear market. So, and I don't really recall that there was a huge difference between different chains in the past, right? Even during the bull market, I feel like if there's a bull run, everyone's growing. So I think picking which ecosystem. Just to summarize, I think for us it was really more about kind of like, hey, where do we know people? Where do we have prior experience? How easy is it to onboard? Like learning Rust versus like Solidity, or now Move with the new chains coming. That just happened for us to be Solana because we were at a time where Solana was pushing the hack houses, the hackathons. It was relatively easy for us to learn Rust over other things. So that's kind of how we ended up on Solana.
Are you going to stay?
I mean, well, can I really say no now? I think so. Like we talked about this a little bit earlier, right? I think the general question is like, it's not that I look at Solana and I see, okay, like over there on the other side, it's like much greener, and it's just Solana where it's like
everything's red, right?
Yeah, I think everyone is having a hard time right now, right? And I think I can absolutely see a future that is like multi-chain, for sure, right? So. I think if you look at, especially if you look a bit beyond DeFi, there are just certain things that you cannot do if you don't have a high performance L1. So like if you look at, especially on Solana, if you look at things that are happening in the GameFi space, it's hard to imagine something like that happening on ETH L1, right? So I can totally see a future that is multi-chain, where every chain has like their dedicated use case, their kind of like hero case that they're really good at. So I don't think we are in a rush to leave. But I mean, obviously we're like also aware of what's happening everywhere, right? I don't think, and I like. Maybe speaking a bit on behalf of other people here, but like I think no one on the Solana ecosystem is super religious, right? And they're like, oh my god, like we have to be on Solana no matter what. So right now, like I said, everywhere has had hard times, so I think we're kind of like just dealing with it for now.
Yeah, that's a great answer. Thanks for that. Yeah, what about ETH2? Anyway, I'm kidding.
Which ETH L2?
Well, let's not talk about that. So you were mentioning cross-chain, right? And I think that's like a very interesting topic because in DeFi, like for the longest time, like protocols have been competing for liquidity, right? And liquidity has been segmented, which is, in a sense, it makes sense because every single chain is trying to gain their own liquidity, is trying to build innovative products, right? And they need a TVL for it. On the other hand, you have money kind of being scattered around, and like that drives the need for capital efficient products. But again, capital efficiency suffers from liquidity being segmented. So, like, I'd be interested to hear like what your guys' take on cross chain is and how you kind of thinking about cross chain in your product. Because if the thesis is that the future is multi-chain, then do you pick a chain and stay there, or do you try to kind of develop across multiple chains? And like, if you do that, how do you think about interoperability?
I can start. We went through this problem a while ago. And I mean, especially for us, like liquidity fragmentation is a big problem. Like we can't just deploy on 30 different chains and then pray that it kind of works because the slippage goes through the roof, right? So for us, we took a look at kind of ecosystems in general. And generally we saw roughly 2 ecosystems that kind of could be roughly interesting. One was kind of Solana kind of had their own bunch of devs that were doing their own thing. And then 2 was EVM. So based on that, it was kind of, do we want to do multiple chains or a single chain? And I think for us, it made more sense to pick a chain, go with it, and try to kind of build everything on it. Like we have a very big thesis around composability. So we focus quite heavily on kind of getting projects to integrate with us. We're integrating with other projects. We're building structured products with kind of other projects and so forth. And so because of this kind of large thesis, we kind of had to like go pick one chain and settle on it. We chose OP. It's kind of done quite well for us so far. We're not kind of married to it, but I think that we would probably stay ideally on kind of one chain and probably EVM in the kind of... I think that the big thing with TVL is that like it's so mercenary, right? Like, and at the end of the day, if you look historically, like what happens with the TVL in times in crisis like this, it goes all the way back to Ethereum. Like we know teams that bridged treasury funds from Solana back to Ethereum, just because the security is there, right? So based on that, we know, okay, we can't trade on ETH L1, obviously, but like let's pick an L2 and let's go for that, and that's kind of what we've done.
Yeah, I would like to echo with Nick. For now, we would like to stick with EVM and also like a single chain. And for our consideration right now, we actually are building an Arbitrum at the moment. So the reason being ecosystem, community. So for us, our audiences are used are mostly traders. So for traders, I think it's really important to hedge their delta and to hedge their gamma. So the reason why we choose Arbitrum is because I'm not sure if you have known of the products called GMX. GMX has been doing really well, and they offer perpetual. I'm so sorry. They offer perpetual trading. So we think it's really important to be in that ecosystem to provide something that the traders can have different options. So right now there is a lack of the gap of options in Arbitrum system. So we are really trying to be like this star in the new Arbitrum community. So the next time, they can hash the delta and hash out this, within the whole chain, the whole ecosystem itself. So it's easier for the traders, and to echo back to your question about institutional investor. I think being as user friendly and being the simpler to use is still what DeFi protocols are still catching up. So that's also what we are trying to catch up to.
So if I were to sum it up, it would be something like, find a place that makes a lot of sense for your product, where you can showcase how great your product is, and then kind of like observe the space.
Yeah, for that sense, there's always a conflict between business and technical and different angles, right? So from the business development perspective, we wanted the community to be as complete as possible, as competitive as possible. From the technical perspective, we really need the support of grants, like the technical support. So I know OP actually offers a lot of support, and Polygon does as well. So there's really like a conflict. So in general, in a nutshell, I think this most important is to find the chain that is the most competitive and the best suit your product.
That makes sense. I want to do a quick check on time. How are we doing? Oh, we have 1 minute and 24 seconds. What can we do in 1 minute and 24 seconds? Maybe someone can quickly, like you were saying, Nick, like that liquidity is mercenary, right? It's mercenary because it's incentivized. Do you have any thoughts on like how we can make it less so? Like, do you have any thoughts on how these protocols can actually? First of all, do you think there's value in like getting people who are heavily incentivized to provide liquidity, and then how do you think we're going to transition over to sustainability?
I think it's a chicken and egg problem to your point before, right? Like the liquidity versus the demand, and it's a really beautiful mechanism that's been made, which is you can bootstrap your liquidity so that you can then get the demand, and then hopefully once you get the demand, the liquidity is then kind of
hopefully.
Hopefully is the key word, right? Like, but then hopefully then it's kind of then you don't need to incentivize for it. So I think it's still kind of required in that sense, just to kind of help. I mean, it's done wonderfully in kind of helping kickstart the whole of DeFi summer effectively, right? Like, it's a super expensive kind of acquisition mechanism, but it's kind of helped us get through this kind of speed running of finance in a much like shorter period of time than otherwise we would have had to do.
Awesome. I think, we're doing great. 3 seconds left. Well, thank you guys for being here, and thank you to the panelists for sharing their thoughts, and hopefully this was fun and interesting.
Thank you, Victor.
Thank you, Victor.
And,
Yeah, thanks for having us.
Great
Round of applause for them,
moderating.
please.
Thank you all.